Mike, Lars, welcome to Real Vision.
Thanks for having us on, Ash. It's great to be back.
Thanks, Ash. First time at Real Vision. Very nice.
Yes, Mike, you were on not long ago talking about central bank digital currency. Lars, your first time on the network. Welcome.
Thanks.
Yeah, and it's pretty funny you said that because I watched the video and I was reading some of the comments. It's kind of like that Jay Leno has people read mean tweets skit. Somebody called me Milton Friedman reincarnated.
Perfect. I'm sure we'll have an opportunity to get to that today. You guys have created a report for the block about stable coins. It's a serious, analytic, and very much data-driven approach to the subject. We're going to give you gentlemen the opportunity to expand upon that, to map out the ideas in that report, because it's very important, I think, for people to understand this topic. It's a concept that comes up very often, but you guys do a real deep dive that fleshes it out at a level of detail that I haven't seen elsewhere before. I should say the study was commissioned by GMO. And with that, let's jump in and talk a little bit about the opening section. You know, the report begins with this large foundational question, specifically, what is money? What are the founding principles of money? And it really begins at the very beginning.
Yes, and that's really why we should always get to the root of concepts and ideas. And anybody that works in cryptocurrency or has kind of observed Bitcoin outside of the ticker price that's quoted on CNBC, your former network, and some of these other places, they see that really that's a philosophical question in some ways. But many people within cryptocurrency, as we kind of discussed on the CBDC episode, they are rediscovering financial history and don't, in many cases, truly understand why certain things exist in the financial system. And we wanted to make it clear in this report why central banks exist from a tier 1 to tier 2 perspective, and how they provide the economic root where all the vine, basically, from everything that we do in society comes from that third-party commitment power, which is central banks, essentially, with the lender of last resort and market maker of last resort. And we show that it goes from tier 1 to tier 2 with the financial institutions and those that have access to the Federal Reserve or say some of the other central banks' balance sheets, because really all money is an interconnected chain of IOUs, and it stems from the third-party commitment power. But
let's jump in right there.
Though, I will say that Bitcoin realigned third-party commitment power. And this is where the Bitcoiners will like that, because I came into Bitcoin and crypto for a reason. So, characterizing me as Milton Friedman reincarnated, I don't think it's fair completely, because proof of work is the third-party commitment power that a central bank provides. And it's just realigning incentives. And really, that is pretty awesome. And you can have a settlement layer that's basically completely peer-to-peer and distributed, and it's built within the internet. That's revolutionary. I mean, that's why the cryptocurrency market cap the other day just passed $2 trillion. And we have the Coinbase IPO, which was just yesterday, for context for those viewing.
Yeah. So Lars, Milt, let's start out with a few definitions here. What is third-party commitment power, lender of last resort, function? These are terms that people who are coming to us from the computer science side may have heard, but haven't gotten the formal definition of. So let's start out with some formal definitions just to expand upon this conversation and bring everyone in.
Third-party commitment power is a promise, basically, that I am giving you this dollar and that you will be able to redeem it, that you will be able to use it to extinguish debts, as well as purchase goods, as well as basically do everything that we use money for, because we went for the principles of money, which is a unit of account, a medium of exchange, and a store of value. And what the difference is between fiat currency and all these other mediums of exchange and stores of value that we have, there are countless ones out there that the private sector does better than anybody, because that's where innovation comes from. It comes from individuals like ourselves, where you're going to a meeting when you're not feeling well because you're motivated, because you want to be there. Myself and Lars, we work countlessly through the weekends because we love what we're doing right now. But the one thing that really we can't do, and this is kind of something I do agree with in a sense, is the unit of account, because everything is denominated, whether it's PayPal credits, whether it's even Bitcoin, you're quoting it in US dollars most of the time. And that's what we actually saw. And this is really kind of getting to the expansion of what dollars are and how important they really are within even the digital assets ecosystem, 99% of stable coins, that big aggregate supply, which Lars can jump into all the data that you'd like. He's the whiz with that. 99% of it is US dollar denominated. It shows how much money there really is in US dollar currency demand around the world. And that actually kind of, when you compare that to, say, even the IMF's SDR basket for foreign reserves, there's only about a 60% US dollars there. So that really even shows that even within the digital assets ecosystem, and that's kind of something that's ironic, most of it is priced in USD.
Yeah. Speaking of digital assets, the next section is called e-money evolution. Talk a little bit about the e-money evolution as you define it, and explain a little bit about what that means, why that broader philosophical question is important for people to understand in terms of their understanding of stable coins.
Sure. Well, e-money really, that's what another one of these roots are, because as I said on the central bank digital currency episode, what has been will be again, what has been done will be get done again. There's nothing new under the sun. When you're looking for technology, really just makes things more efficient. It's an evolution. I'm not really sure it's necessarily a revolution in many cases. So if you actually look at the way that some of the global regulators and say the G7 or the BIS and the IMF are treating cryptocurrency and stablecoins right now, they're treating it very similarly. If you go back and read the old text, which we as research analysts do, we're historians. And if you read things from the early 90s and late 90s and how the evolution of traditional Web 1.0 e-money was coming about, there are so many parallels there. And there are parallels with the way that they treated it because they understand that it is the future. There's no doubt about that. I mean, you're seeing institution after institution continue to come into the digital asset space. And you're seeing further people that are really starting to out themselves that they're getting into digital assets. I believe Dan Loeb from Third Point was one of them that was revealed recently. And it's great to see because we all came from that traditional financial system. So e-money, though, it's following the similar path that we had with e-money from the early days. But this one, it's a little different in the sense that their protocol is built within the internet and that it's programmable money. And it's going to be able to provide certain things from an interoperability standpoint. And that's why some of them could be circumventing the unit of account function. And that's why I guess some of the central banks in G7 and things they can't even call them stable coins. If you look at it correctly, they call them so-called stable coins, which I laughed about with Nick Carter from Castle Island Ventures and Larry Cermak, our director of research, on their podcast recently. But it's something where the elephant in the room, you can't ignore it anymore. And there has to be a way that we can utilize these stable coins for the private sector to innovate and then have the foundational root of money and the functions that central banks do provide. And I think that that's really the best that we can do for society.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.